demystify, learn. BQ Learning. Only on Bloomberg Quint.
Hello and welcome. This is Bloomberg Quint Live. You're watching All You Need to Know, and I am Agam Vakil. Let's start by taking a look at some of the US markets right now. And as you can see here, we have seen some weakness come through on account of, the war of words between Donald Trump and, the Chinese government. As you can see, Dow Jones, S&P 500, along with the Nasdaq's all ending the day in the red. And it's the same for the Europe as well. Europe also, a lot of these indices, in fact, something like a FTSE down by as much as 1.7% in today's day of trade. In terms of Asia too, we are looking at some amount of weakness seep in on account of the substantial decline that we've seen across the US and, something like America, or rather the Europe. But that said, let's take a look at the SGX Nifty. What does it mean for the SGX Nifty? It's down by as much as 0.5%, currently at around 10,775. And in terms of the way some of these key indices moved last week and last Friday specifically, while the Nifty ended marginally in the green, we did see a lot of weakness in the mid-cap and the small-cap indices. In fact, the small-cap index down by as much as nearly 1%. The Nifty Bank also saw some weakness. A lot of this weakness came on the back of the PSU Banking Index, which moved down by as much as 2.2%. Now, in terms of some of the key gainers, we did see a lot of strength in the Nifty IT Index, essentially led by the strength coming through in Infosys and TCS. Nifty Pharma continuing to move up on account of the gains this time from Cipla, Sun Pharma and Lupin. And even on a month-to-date basis, Nifty Pharma continues to do much better than some of the other sectoral indices, with good gains coming in for the Nifty Energy as well as Nifty IT Index, up as much as 3% for each of these indices. And on the losing end, we do have more weakness in the Nifty Infra as well as the Realty indices, each of these declining by as much as 2.5% to 4%. Now, when it comes to your year-to-date basis, the Nifty IT Index continues to be the outperformer, and it's not just the large cap stocks. We have seen a lot of strength come through in the mid caps as well, and the PSU banks along with the Nifty Realty Index continues to bear down on broader markets as a whole. The India VIX showed very little move despite the fact that we did see a lot of movements range bound though in the Nifty, and it continues to be on 12. In terms of the top ADRs that we are keeping an eye on, strength coming through for a lot of these exporters, so Dr. Reddy's, Infosys as well as Wipro, and HDFC Bank also ended the day in the green, but a lot of weakness coming through for Vedanta, ICICI Bank, and to a certain extent Tata Motors. Not too much to speak for. Now, again, this may be a little bit of a surprise considering the kind of buying we saw in the last half an hour of trade on Friday. We would have assumed the FIIs may have bought some, but they didn't. There's a net sell figure of over 1,500 crores. DIs, on the other hand, continue to look for some discounts, and they've bought in on a net basis about 560 odd crores. Now, what kept the indices buoyant last Friday was, as I mentioned earlier, TCS and Infosys, along with Reliance Industries also lending some strength. But on the losing end, we have weakness in ITC, SBI and L&T, along with HDFC Bank, which is surprisingly has been weak over the previous few sessions. As said, let's take a look at some of the futures and how that entire scene spanned out right now, and we can see there's been some amount of accumulation, largely on account of the gains that we saw in the last half an hour of trade. The Nifty Bank, on the other hand, the index declined by as much as 0.5%. We also saw a decline in open interest, thereby signaling unwinding longs which were unwound last Friday on the Nifty Bank futures. There really aren't too many trends building up or based on the trade that we saw last Friday. We did see unwinding in the 10,500 put and, more unwinding in the 10,900 call, but this was understandable considering we saw the Nifty inch up slightly to a certain extent. Not too much right otherwise, and the range continues to remain within 10,700 on the lower end, which has maximum open interest, and that's the put, and the 11,000 call on the upper end, which will provide some sort of resistance should the Nifty make a dash for that level. Now, in terms of some of those key variables that we're watching out for, the Nifty put call ratio, that stands at around 1.5 1.57 from 1.54. On the other hand, the put call ratio for the Nifty Bank, well, declined to around 0.76 from around 0.87. And in terms of some of those stocks which are in the F&O band right now, we have Divan Housing Finance, Jet Airways, and Just Dial. But Rampur Chini moves out of the band, so watch out for this one. It did see some strength last Friday. Torrent Pharma, of course, one of the stocks from the pharma pack, also doing well. Fresh longs building in. Among other stocks, we have Berger Paints also seeing fresh longs, and Ajanta Pharma is the other stock which has also done well. That's up another 4%, adding another 9.5% in open interest towards fresh long. So a lot of stocks out there that have done well, despite the fact that we've starting to see some amount of gyration, although being range bound in the indices. We'll be watching out for some of these cues, but this is as far as our own markets are concerned. Let's now go across to Paul Allen for the top international headlines.
Japan posted a bigger than expected trade deficit for May, with imports soaring 14% on year, almost double the median forecast of 8%. Imports also beat expectations with an 8.1% gain, the 18th straight increase. That left a deficit of $5.3 billion, where economists had expected $2.5 billion. China remained the largest foreign owner of treasuries in April, even with a slight drop in holdings. Beijing's stockpile of US bonds, bills and notes decreased by $5.8 billion to $1.18 trillion. Its appetite for US government debt shows few signs of waning as tensions grow over trade. The second biggest holder, Japan, saw its treasuries drop by $12.3 billion to just over $1 trillion. Australia will begin negotiations with the European Union on a free trade agreement and what would be one of its biggest potential deals. Trade Minister Stephen Chobos told Bloomberg talks will start in Brussels next month, with Australia seeking better access for its agricultural products. Chobos says exports of beef, lamb, sugar, cheese and rice are significantly constrained by EU tariffs. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
And right now, we're actually seeing oil fall for a second day in a row off of the uncertainty that's happening as we head to Vienna. First, to my first Bloomberg Terminal chart, this is the dashboard in your own Bloomberg Terminal called OPEC Go. Easy to bring it up. And we can see the production numbers for all OPEC member countries, not including Russia, though, of course, because that's just an ally. But in pie chart form, we can see Saudi Arabia, of course, as we know, 32% in terms of production for the total pie here. We can also see the crude production that's happening from OPEC. You could also see from 2016 when those curbs started to take effect all the way through 2017. We're actually the low that we haven't hit back since March of 2017 or so. Let me flip this up for you and I can go to my second Bloomberg Terminal chart. One of the concerns right now as we head towards later this week in Vienna with those OPEC energy ministers is spare capacity, because we know that the 5-year glut that we were talking about over the past year or two is pretty much gone. And we can see that spare capacity is now at 2.8 million barrels a day. The IEA says this could fall to 2.5 million barrels a day. And Russia and Saudi Arabia want that, as you mentioned, to bump up by about 1.5 million barrels. Interestingly, Venezuela as well as Iran could see 1.5 million barrels out of production because of, for example, economic sanctions as well as the economic crisis happening in Venezuela. So this is spare capacity you want to know about. Hang out with me this way on this other side of the screen, and I want to bring in Russia, because Russia has been one of the most strident callers to try to get more production online. This is Russian production in white. The last time that they saw a peak was at the end of 2016. If we did 1.5 million or 1.8 million, as some people are saying, that would get us close to where we were here. It wouldn't come all the way up here, because we're also seeing some issues in Mexico and some other countries there. But Russia just last week, Alexander Novak, the energy minister, saying we need to get more oil out, and Russia definitely is one of the people who wants to do that. Finally, we can't discount what's happening in terms of oil coming out of the U.S. shale. Let's flip up the board one more time, my last Bloomberg Terminal chart, because as oil supply, of course, comes online, that will have a weighing effect on prices. And we can see that by the end of this year or so, third quarter, maybe the early part of the fourth quarter, U.S. shale could actually exceed Russian Russian oil production here, as indicated by the red line. We've already surpassed Saudi Arabia here in the blue, and then, of course, expected to continue even more, 12 million barrels a day, making it a net energy exporter. So all these things that OPEC finance ministers, OPEC ally finance ministers are all trying to come together, trying to figure out whether they can come to an agreement.
Well, back to Indian equity markets, stock of the day is Pokarna. We're expecting some sort of negative reaction coming in from this counter, given that Ashish Kacholia has sold in 1.2% stake in the company for a sum of around 6.5 crore. He has sold in 3.6 lakh shares of the company at a price of around 172. Also, if you see, Kacholia has held, as of March 2018 shareholding pattern, held around 7.33% stake. If you see what the company has been engaged into, granite quarrying. Apart from that, it is an exporter of finished granite in India, exposed to over 12 countries. If you look at the shareholding pattern of this company, promoter shareholding stands at 57%, while public shareholding stands at 43%. If you look at the consolidated FY18 performance of the company, revenues are down by as much as 11% to a number of around 367 odd crore. And if you look at the EBITDA, that is also the profitability of the company has also been falling by as much as good 40% at a number of 71 crore. Also, the company has seen some amount of decline coming in on operational front. We're looking at a 29% downtick to a number of around 97 odd crore, and the margins also have shrunk to 29.6% as compared to 37.1% in the corresponding quarter of the previous year.
Effective from today, Vedanta will be replacing Dr. Reddy on the S&P BSE Sensex Index, and with this change, nearly weightage of 6 out of the 11 sectors in the Sensex will fall. Now, the pharma or the healthcare sector will have only one stock in the Sensex, that is Sun Pharma, and the weightage of this sector will be at its 8-year low, just 1.7% effective from today. Now, the BFSI sector, that is the most dominant sector in the index with 8 companies, will see a minor drop in its weightage by around 40 basis points to close to 40.4%, and the weightage will be still at as high as 40% on the Sensex. Now, with Vedanta's inclusion, nearly after 3 years, the metal sector will see 2 stocks in the Sensex, and the weightage of these 2 stocks, that is Tata Steel and Vedanta, will be 2.6%. That is the highest for the sector in the last 5 years. Now, if you see the capital goods and telecom sector, now these 2 stocks or these 2 sectors will have only one stock in the Sensex, that will be Bharti Airtel and Larsen & Toubro, and the weightage of these 2 stocks will hit a new low, and Bharti Airtel's weightage on the Sensex will be around 1.2%, and that of L&T will be 4.7%. Lastly, real estate sector and cement sector will still have no representation in the Sensex.
Let's get your check on the commodity space, starting off with oil prices, which are currently trading more than 1% lower after losing about 2.5% on last Friday, and continued its decline for the 4th straight week. Now, this is on the back of Saudi Arabia and Russia, which have been actually pushing for relaxation of the output curbs that were placed last year. In fact, the Russian energy minister has advocated lifting these caps as soon as 1st of July. Also, remember that the OPEC members and ministers will also meet in Vienna on Friday to discuss the relaxation of output cuts. So we'll have to wait and watch how the entire situation actually pans out. But as far as base metals are concerned, the index itself halted its 3-week advance. Metals fell on account of 3 reasons. One was the rising trade tensions, stronger dollar that we have seen in the recent past, and last week China also reported softer macro data. Zinc was the top loser in trade, declined about 3.4%. Aluminium and copper declined more than 2% each, while lead was down about 2%. As far as nickel and tin were concerned, they closed marginally lower. Now, if you look at the Shanghai Futures Exchange, most of the base metals have in fact started on a negative note, but Shanghai Steel is currently trading flat. Gold, in fact, posted its biggest decline since December 2016, and volatility has now reached a year's low.
Amongst the stocks that we're tracking in trade today includes ICICI Bank. Now, this is according to a ET report, and it says that the board is considering reshuffle of the top management. In fact, ICICI Prudential Life's chief Sandeep Bakshi, the report says, could be named as an interim CEO, and the decision could be announced as early as later this week. So that's one stock that development that we've been tracking. A negative development for PNC Infra, the lowest bid for Purvanchal Expressway has been cancelled. Now the UP government has decided to re-invite bids for the project, where the company had been declared as the lowest bidder in May, and that was for a quoted price of about 1,700 crores or so. So this could see a negative reaction. We're also watching out for NBCC, which has said that they're looking at revenues growing about 40% in FY19, and that they're looking at African markets for contracts. That's according to Bloomberg News. So that's another one to watch out for. Panacea Biotech, they have said that the company, along with their partner Apcotex, has settled a patent dispute with US-based company Celgene Corporation. Now this is for anti-cancer drug called Abraxane, and based on the settlement, Panacea Biotech and Apcotex will receive a non-exclusive license where they'll be able to sell this drug, generic version of this drug, in the US on a mutually decided date. The date hasn't been shared right now, of course, and other details also, they say, are confidential, but do watch out for that name. That apart, on the back of the IPO of its associate company, Shreyas Shipping will be in focus. Its associate company, Avana Logistics, has filed for an IPO, so you could see some sentimental reaction on the stock over there. In bulk deals, you have Balrampur Chini, where California Public Employee Retirement Scheme has bought 0.5% stake in the company, so we could probably see some more uptick than we saw on Friday. But those are some of the stocks to track in trade today.
Now, according to a PTI report, Vodafone-Idea and Idea Cellular are expected to receive the final approval, that is from the Department of Telecommunication, in relation to their merger. Now, both the entities had formally announced the merger on March 28, and nearly after 15 months, they are expected to receive all the approvals. Now, both the companies were expecting the merger to complete by June 30th, and Idea Cellular will be holding an extraordinary general meeting on June 26 to change the name of the company to Vodafone-Idea Limited. Now, the combined entity is expected to be the #1 operator in India, with a revenue market share of close to 40%. Now the customer base of the combined entity is expected to be more than 43 crore, and it will have more than 1,100 megahertz of spectrum to service this customer base. Now on the financial side, the net debt is expected to be around 86,000 crore rupees for the combined entity, and the net debt to EBITDA is expected to be around 6.3 times. Now Idea's debt post the ATC and Indus Tower deal is expected to be around 41,826 crore rupees, which means Vodafone-Idea can contribute only 44,300 crore rupees in the merged entity, according to the merger agreement of both the entities. Now the combined entity had a total revenue of close to 60,600 crore rupees for the financial year 2018, with an EBITDA margin of close to 22.5%. On the market share front, the combined entity is expected to be the #1 operator in at least 11 or the 22 circles present in India, and in the remaining 11 circles, it is expected to be in the #2 or in the #3 position. On the synergy side, in the last conference call, Idea management did say that they are expecting the synergies to be higher than what they had earlier guided. Now the operational synergies that Idea had earlier guided was close to 14,000 crore rupees from the 4th full year of merger completion. Now they are expecting an immediate synergy benefit of close to 2,000 crore rupees on merger of overlapping tower sites. Now the management also said that the merged company would not require any incremental external cash, as the synergy benefits, a longer tenure of deferred spectrum liability and market correction will take care of the incremental external cash that the merged entity will require. Now the only challenge that the combined entity will have is that they will have to bring down their revenue market share in circles where it is exceeding 50%. Now this is according to the merger and acquisition guidelines of the DOT. Now the merged entity's market share exceeds 50% in only 4 circles, that is Haryana, Kerala, Maharashtra and Gujarat. brokerage calls for the day. First we have is Motilal Oswal on TCS. Now the brokerage has maintained its neutral rating on the stock with a target price of 1,750. Now according to the brokerage, the 16,000 crore rupees buyback of TCS will be slightly negative on the EPS front. However, when it comes to the return ratios, it is a positive move. Now Motilal Oswal is expecting the EPS change to be low by around 50 basis points as cash reduction will lead to lower other income. However, the return on equity would increase because of lower net worth of TCS. Now the 16,000 crore rupees buyback implies that the company is returning nearly 40% of their cash balance to the shareholders. Now the brokerage also says that historically the company has maintained its 75% payout to shareholders over the last 3 years. Lastly, the brokerage is expecting the acceptance ratio likely to be higher on the retail side like the previous time. Second, we have is Credit Suisse on Larsen & Toubro. Now the brokerage has maintained its outperform rating on the stock with a target price of 1,700. Now, according to the brokerage, the order inflow has been exceptionally strong, especially from the domestic side. More than half of the orders are coming from the state government entities now, according to the brokerage. However, on the private sector side, ordering still continues to be low in single digit. Also, L&T has not received any orders from the Middle East so far in financial year 2019. Now, the brokerage has maintained its outperform rating on the stock on the back of very strong order inflows, execution pickup, steady profitability, cross segment, margin uptick on operating leverage and pricing power, and because of strong cash flow. On the valuation side, the brokerage says that they still look reasonable, and as investment cycle is picking up, there could be more upside for L&T.
Now there's lots to talk about over the course of the day, and you will find all the live market action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. The government has decided not to extend the ceasefire in Jammu and Kashmir that was announced at the beginning of the holy month of Ramzan. The Defense Ministry issued a statement to that effect on Sunday. And the investigative agencies probing the alleged Punjab National Bank fraud have detected that diamond merchant Nirav Modi possessed at least half a dozen Indian passports, and a fresh FIR is being considered against him for this. Meanwhile, the Enforcement Directorate is set to soon file a fresh charge sheet against Vijay Mallya and his companies on charges of money laundering and for allegedly cheating a consortium of nationalized banks. And with that, it's a wrap on all you need to know. Don't go anywhere. Up next is Indian Open. Stay tuned in Bloomberg Quint.